Hello traders, Jason here with SwingHigh.com. It is Wednesday, January 27th, 2010, and this is your post-market analysis. Well, we had a very interesting day today. If you recall yesterday's post-market analysis, I warned that you should be watching the Fed at 2:15. We'll get to that in a second. In general, the markets were up, chopped sideways for most of the day until 2:15, but financials up 2.5%, the Russell's up 1%, the Nasdaq up 0.5%, the S&P up 0.5%, and the Dow up 0.4%. So the Nasdaq, Russells, and financials were the strongest today, which makes today look like a very, very bullish day. But it's not necessarily the case on a daily chart, so we'll get to that in a second too. Here we are on the SPY 5-minute chart. SPY is the S&P 500 tracking ETF. We had a slight gap down and then filled the gap completely, and then we made a lower swing low, excuse me, after breaking down under the 109 mark, which we identified as support and resistance earlier. We fought hard to get back above that, and then eventually it broke and came up here and stalled, made a lower swing high, which is basically a bullish or a bearish pennant in this case because the markets were down. Here's just a visual of that. Then we broke down and broke down again through 109, came down here, tested the low of the day, made a slightly lower swing, not really. One second, just clean this up a little bit, and then the Fed announced at 2:15 we were under this resistance at 109, and big volume stepped in at 2:15 when the Fed announced. We looked like we were going to sell off hard, and we came down here at 108.30, almost testing the 108 support line, and then kind of chopped around until about 2:35 when we finally broke above 109, and then came up here, made a bull flag or a bull pullback, and then rallied into the close and actually tested 110 at the end of the day. Made a slight topping formation here and finished sort of on a bullish pennant. So that looks like a bullish close for sure. Definitely volume picked up at the end of the day, but let's go out here to a daily chart. And as you can see, we are still in this low base formation or descending triangle. We had this breakdown and now we're chopping sideways. So for the bulls to really get control of this market, tomorrow we need a higher high and a higher low. That would be a good reversal pattern here. So I'd like to see us get above 110.15 or that general area on SPY, and that would definitely be an argument for a reversal pattern here. And from there we could come up here and test 111 again and 110, 110.70, excuse me, and then maybe eventually 112. And I wouldn't expect us to get much higher than 112. I would like to see a lower swing high if we are to bounce here. If not, we did make a lower low and a lower high today, so technically we did continue to the downside. I would definitely like more consolidation, more sideways chop, and then a solid break of 109 and possibly 108, and that would be a nice bearish case leading into next week, as after 108 we really don't have much resistance until 105 and 103.70. So take a look at the market internals here. The tick was, oh, excuse me, sorry about that. The tick was pretty much neutral for the day, leaning towards the bearish side. The tick Q, bearish and then finished bullish. The Trin was bullish all day with a couple bearish spikes around the Fed announcement time. And the Trin Q was actually mostly bearish today, but then pulled back and finished bullish. So that's your post-market analysis for today. Thanks for being a part of SwingHigh.com.